Hey all, welcome to ShareTreck. This is Raj here, and this is the 5th of July 2022. Let's go and have a look at our daily update. First off, let us look at the good news that has come out from AstraZeneca for mergers and acquisitions, and then let's look at all the horrible news that is coming out today. Well, here we have the first headline, which says AstraZeneca to buy biotech firm 10-year 2 for up to 1.27 billion. And this firm has had a therapy in phase 1 of FDA clinical trials for non-Hodgkin's lymphoma. And that's the reason why this acquisition has happened. We were not tracking this company. In fact, this is the first time I'm hearing the name of this company, because I think it is private. I was trying to find if I could, trying to see if I could find the website for this company, and I couldn't. The article basically says that 10-year 2's experimental drug TNB-486 belongs to a class of bispecific antibodies that are engineered to redirect the immune system to recognize and kill cancer cells. It's currently in phase 1 trial in patients with B-cell non-Hodgkin's lymphoma who have received 2 or more previous lines of therapy. And they say the transaction is likely to close in the third quarter of the year and is not expected to impact AstraZeneca's 2022 outlook, the London-listed company says. 10-year 2 Inc. was spun off Tenebio, which was bought by US biotechnology firm Amgen last year. So there's been a lot of spin-offs and buyings and all. So this is a bit of good news for us, because it shows that there is still opportunity for many of the genomic companies to get funds by either being bought over by big pharma, or through deals with big pharma where they make milestone payments and engage them for some kind of research. So with that good news said, let us wade into all the darkness of the market today. First headline I have for you is Russia is set to switch off gas for work on key pipeline, and Germany fears the worst. So here the ironic thing is that Russia is saying that Siemens could not maintain the machines that are used for pumping the gas because of the sanction, and therefore they are not able to pump gas into Germany. So it's like a catch-22 situation. Is Germany going to let Siemens go and do the work, or whether they are going to allow the sanctions to continue and end up not getting gas? Fortunately for them, the other headline here says US LNG has eclipsed Russian pipelines for the first time as a source of natural gas for Europe. So we have this picture of Putin and Biden looking at each other out here just for dramatic effect. But basically, I think Europe is still dependent on Russian gas for at least 1/3 of its requirement, and it is scrambling very fast to try and see if they can get some other source for some other sourcing for that 1/3, and then they will be totally independent of Russia. And meanwhile, there is another headline out here which doesn't sound good for us. As always, it says euro slides to 20-year low against the dollar as recession fears build up. So recession is anticipated across the globe in many of the major economies because of the high inflation level. But I think that euro should be more worried about a stagflation environment because of the oil embargo. If they don't get the 1/3 of oil supplies that they are still depending on with Russia, because by end of 2022, their own dictate is that there should be a total embargo. So if they succeed in getting the 1/3 gas supply from somewhere else, yeah, recession is something that we can talk about. Otherwise, I think stagflation is more of a possibility. The flip side of this is that if euro is sliding to a 20-year low against the US dollar, then when we do our analysis, we should expect the US dollar index to go up significantly. It was already forming a cup and handle pattern before, so we might most probably see it going up again. There is another Nothing Burger article out here. It says raising interest rate is the wrong solution to the inflation problem. I have been saying that in this channel for quite a while. I've been saying that instead of raising interest rate, they should have tightened the balance sheet first. That way, we would not have upset the apple cart and we would have taken out the excess liquidity, because there are two components to the balance sheet. One is the bonds that were bought in order to pump liquidity into the economy. That should have been taken out first, and that would have reduced the amount of cash in the economy. And the second thing they could have done was they could have started tightening up the mortgage-backed securities purchase by not renewing the ones that come up for renewal, and by not buying new ones. And also, finally, they could end up either allowing the MBS to expire or start selling some mortgage-backed securities if it was conducive. By doing those things, they would have mopped up a lot of fund. The Fed would have mopped up a lot of fund, and then they would still have the interest rate to play around with. But they have gone the other way around. That's my personal opinion. Of course, I'm not a central banker. I'm not a great expert, but this is basic economics that I have learned that I'm trying to deploy out here. I could be wrong, because the Fed Reserve Chair and others are very well experienced. I'm hoping that they are doing the right things. But this headline out here doesn't mean much, because throughout the article, there is no solution. They are just saying raising interest rate is wrong, but they have not given any solution. With that said, I think I'd like to go and have a look at Nasdaq. Let's start by looking at Nasdaq first. Nasdaq is down minus 1.37%. So it tends to indicate a bearish kind of a start for us today. And then let me go on to the indicators and see what we have here. First, let us look at US oil. US oil is coming down, and it still has got support at 107.52, whereas the MACD and the momentum seem to indicate that it could fall further. If it does come and challenge this support out here, it will be interesting to see if it can fall below. And I hope that it does fall below, because there is a lot of demand restriction going on, and therefore the price of oil has got to go down. So this is very important. And also, one of our subscribers sent me an article, a comment this morning, and he mentioned that there is plenty of oil waiting in Iran to be shipped off. They are just waiting for Biden to give the go ahead and sign off on the renegotiated Iran deal. So if that is true, and if that happens, there could be a further fall in oil prices, and that should be indicated in these prices out here. That's my opinion. Let's see what happens, and if the news comes true, it would be good. However, there is a whole lot of other things going on. As I have mentioned elsewhere earlier in one of my videos, there is a effort afoot to put a new grouping in place in the Middle East, which is going to be like NATO. And the US has been successful in getting Saudi Arabia, Israel, and other Gulf states, which were brought together earlier through the Abraham Accords, to get into some kind of a NATO-like alliance to defend each other. And the main reason for that is the fear of Iran going nuclear. And therefore, these two activities are going to be working at tangent to each other. So we'll have to see what happens in that space. Biden is expected to visit Middle East next month, so we should probably this month, so we should be seeing some action out there, and that should reflect in oil prices. With that said, let us go on and have a look at the VIX. The VIX, real-time VIX, shows that today we started off higher than where we ended yesterday, so that's the first negative. And the second thing it shows is that after opening up, we have gone up further, and now we have made the 9-day, 20-day, and the 50-day exponential moving average as support for us. And this is very bad news for the indices, so this is totally bearish for us. And if we were to look at the XLY by XLP, there seems to be a little bit of a hope here. There seems to be a little bit of a risk-on sentiment out here, but I don't think the MACD and the momentum seem to indicate that it's going to go anywhere. So we are likely to fall down further. So I'll consider this to be a wash. I'll go to look at the put-call ratio. Put-call ratio ended up on the last trading day as being very, very bullish. But today, I don't think that's going to be the case. We'll have to see what happens when the market opens. We do not have a market open candle here because this is not yet a real-time indicator out here. So we'll give that a miss for the time being. And with that said, I'm going to go and look at QQQ and see where we are and what seems to be the pre-market indication. So pre-market, we are down 1.29%, and we are constrained here by the 9-day, 20-day exponential moving average, and then by a horizontal line of support at 292.96. Our MACD is bullish but tending towards the signal line. Momentum is below average. So the below average momentum is what makes me feel that we're going to continue going down. But if we went down, we have support out here at 273.52, which is this green line of support, horizontal green line of support. And I think that should sustain us for the day. Given the way we have opened pre-market, strongly negative at minus 1.29, and it's around 8:31 a.m. So I can confidently say that we are going to have bearish open, and where we go from there will depend on other market stimulus that may come up. S&P 500 is also pre-market negative minus 1.18, and it is struggling at this support, which is at 376.38. So if it breaks 376.38, we are likely to go into 369.94, which is the next level of support. The MACD is bullish, and momentum is below average and picking up. So the below average momentum is what is making me worry. But we are all in bearish territory when it comes to QQQ, SPY. But Dow Jones has not yet fallen 20 basis points. So that's one of the things that makes me feel that there is still more pain to be had, because unless Dow Jones also comes to below 20%, we can't say that we are totally into a bear market, and capitulation would not happen, in my opinion, until Dow Jones falls below 20%. So we'll have to wait for that. So there is more pain in store for us ahead. And if we look at the US dollar index, we can confirm what we hypothesized when we looked at the euro headline, which said euro falls sharply against the US dollar in fears of recession. So the funds that came out of euro have gone into the US dollar, and US dollar has gone up. And this is the cup and handle pattern that I was talking about. So we should expect for even more jumps in US dollar, which makes me feel that there's going to be more pain ahead in store for our indices, because if the funds start going into US dollars, the indices are likely to suffer. With that said, I think I would like to go and have a look at the genomic stocks. So here we have the genomic stocks right in front of us, and you can see that Editas is at the very top as of the last trading day with a gain of 6.42%, and at the very bottom is SQZ Biotech, and it's languishing at 3.10, having lost 2.52%. That's around 8 cents. And if you recollect, I had bought 700 SQZ at 3.05, it's still positive. And today doesn't seem to be giving any positive clues. So hopefully if we are able to bounce off this support again today, then I would hope to recover some of my money. I'll take my cash and I'll stay away and not indulge in any kind of adventures. But overall, given the market being bearish, I think we should expect some kind of pressure on the biotech stocks. I think the AstraZeneca news this morning should probably give a lot of hope to most genomic companies, and there will be a upward movement out there. That's my feeling. And also, if you look at genomic companies, they have been beaten up significantly. So there should be some positive out there. And I'm hoping that that kind of clicks in, but I don't know when that will happen. It could happen either today or tomorrow, or maybe it doesn't even happen, because the general feeling is that companies that do not have a strong balance sheet and do not have revenue streams or a product are likely to be pushed down further. With that said, we can look at Editas. Editas is down 4.34% this morning. It's down 55 cents. That's a big drop. CRISPR Therapeutics is down 1.24%. Teladoc is down 1.89%. Intelia, there is no trade in Intelia. In Invitae is down 0.79%. ArcG is down 1.31%. Illumina is down 1.21%. Bluebird is down 2.80%. Beam is down 0.58%. IDNA has got no trades. IMTX has got no trades. Verve has no trades. Vertex is up 1.94%. PSCB is flat pre-market. Allogene is flat pre-market. Allogene doesn't have any trades pre-market. Regeneron doesn't have any trade pre-market. DNA is slightly up pre-market. Novartis is down minus 0.97%. Pfizer is down 1.34%. Caribou is got no trades pre-market, and SQZ is down 2.52%. SQZ has got no trades pre-market. So if we look at the overall situation, I think that in many counters, the investors are trying to take their money out as soon as possible. And that's why we are seeing so many pre-market trades, all of them in the negative, because they are afraid that once the market opens, the share prices are going to fall really heavily. That's how I would read this market action out here. So we should be looking forward to a red market. And that makes me feel really bad because I don't want to be the bringer of bad news to start your day. So I hope you can forgive me for that, but this is how it looks like. Hopefully we have good days coming ahead of us. Bad times don't last, as I always say. So I hope you liked this video, and I hope that you'd be able to put a like out there for me on this video. And if you're not yet subscribed, please subscribe and help us grow this channel. I'll see you soon. I'm working on a few videos, and you can expect some interesting videos to drop in this week. Bye for now.